Hey everyone, welcome to my channel. Today I want to take a deep dive inside my thought process during this NFP session. This video is going to give you much more than just the mechanics of a trade. I want to walk you through the mindset, the waiting, the decision making, and the psychology that most traders overlook. So right at the start, I came into the charts late. This happens sometimes, whether because of real life things or technical setup delays, or maybe I just misjudged how fast the market would move after the news hit. But the critical thing here is that I didn't panic, right? So let's stop here, right? Because this is one of the first psychological lessons, a lot of traders come into a session with the idea that they have to catch every move, that if they miss the first wave, they're somehow behind. But trading isn't a race. The market doesn't care if you're late or early. It just is. What matters is how you engage with it once you're present. So in the first 10 minutes, you see me doing something that honestly took me years to learn. I wait, I watch, I observe. I'm not clicking buttons. I'm not forcing myself into a trade just to feel like I'm doing something. I'm more so observing. Now here's why that matters. When you come in late and immediately feel like you have to catch up, your mindset shifts from opportunistic to desperate. And you don't want to be desperate. Instead of looking for high probability trades, you're just looking for any trade. And that's dangerous. A dangerous place to operate from, because desperation narrows your focus. Right? You stop seeing the markets clearly. You stop listening to your plan. You start listening to your fear of missing out, the famous FOMO. For y'all who are familiar with FOMO. But in this moment, I remind myself the market always gives more opportunities, always. Missing one move isn't the end. And so I just stay calm. What I'm doing as I wait, well, here's the deeper process unfolding under the surface. I'm first assessing the time factor. Time has to align with my setup. Where are we in the session relative to the news event? So I wait till the dark cloud passes, basically. The storm clears, right? After the news, give it a 15-minute wait. But normally I trade the New York's AM session 9:30 open, right? So that already bypasses me. So I wait for basically the initial volatility to settle. Are we in a phase where the market is digesting the data, or are we still in the initial expansion phase? Time gives me context. So this is why time has to align. Time is important. Then I'm assessing price. Where are we trading relative to key levels? I mapped before the session. Did price just break out of an important area? Are we at support or resistance? Am I seeing acceptance or rejection of those levels? Price tells me how the market is behaving, right? Next, I like to do a little macro context. The macro context wasn't shown here, but I normally check inverted correlated assets or correlated assets, but I'll save that for another video. Then I'm watching for setup structure. Are my patterns forming? Are my triggers appearing? Do I have alignment across multiple time frames? All these things are important. I'm also referencing my model. This is my playbook. What playbook setup is potentially unfolding here? Does it match past behaviors I've trained myself to recognize? And finally, the narrative. What's the story the market is telling today? Because you have to learn how to read the language of the market. This is a whole different language that you're learning. Keep that in mind. I like to know, is it risk on or risk off? You understand? These are important for your confluence to your setup? Is there tension between asset classes? That could also give you more clarity. And what I would say on the subject of clarity or confusion, if you're not seeing all these things align, most likely you're seeing confusion or it's not enough clarity, which means, in my opinion, you shouldn't enter the market. So the narrative keeps me aligned with market psychology, right? Now you might be wondering, isn't this a lot to think about all at once? Yes, that's why I practice it. Over time, these steps become second nature. You know what I mean? So you don't have to consciously check every box one by one. Your brain starts to synthesize this information automatically. It's like you listen to a song and you hear it on the radio repeatedly. And during that repetition, you're subconsciously memorizing the words to the song till one day you're just reiterating the song. So, same thing with this. So, as I just said, for the first 10 minutes, I'm not just blankly staring at a screen. I'm actively engaging with the market at a deep level, even though I'm not trading yet. And this is where traders miss one of the biggest edges, the edge of patience. For me, the best traders trade less and spend most of their time waiting, right? Let's talk about the word patience while we wait. Most traders think patience just means sitting on your hands. But it's more than that. Patience is active. It's watching with full attention. It's testing your readiness against your rules. It's waiting for the markets to give you permission to act, right? Not forcing the action yourself. You can't force it, right? And this is how you end up in losing trades, by forcing it. The market is going to do what it wants to do. It's up to you to align yourself with what it's doing and take your opportunities when it's given, right? And yes, the temptation to jump in there is, of course, going to trigger. I see little moves happening. I see small pullbacks, small breakouts, but I remind myself my job is not to catch everything. My job is to catch the right thing, right? But it is tempting. I want you to really hear that. My job is not to catch everything. My job is to catch the right thing, right? Okay. So, even though I missed the first entry, I'm holding my center. I'm watching the 1 minute chart, but I'm also holding a higher time frame picture in mind. What's the 5 minutes saying? What's the 15 minutes saying? Where are the key zones from that 1 hour chart? As this unfolds, I also pay attention to how the market reacts around psychological levels, like whole numbers, previous highs and lows, session opens. Sometimes you could take in consideration retail patterns too, VWAP, right? All these levels tell me something about where the crowd is focused, all as confluence to make it a higher probability trade, right? Meanwhile, I'm also watching volume. Is volume expanding or contracting? Are we getting heavy hitting activity, or is liquidity drying up? This tells me about the strength of the move, right? At the same time, I'm monitoring correlations, right? All of this keeps me in tune with the mood, with the market's mood. Basically, yeah. Because as I said, this is a language. It has emotions. It's showing you its emotions, and it's up to you to read it. I also reflect on my own mood. I observe my emotions that I'm feeling at this time. How am I feeling in this moment? Am I calm or am I agitated? And of course, sometimes the market gets you agitated. Do I feel pulled toward action, or am I at peace with waiting? Self-awareness is huge here. Very, very much. Market is going to teach you yourself. It's going to give you a self-realization in a lot of ways. And it's up to you to observe it, make your corrections, tweak what needs to be tweaking, right? A trader without self-awareness is like a car without brakes. You can have all the horsepower, all the technical skills, all the fancy tools, but if you can't regulate yourself, you'll crash at the first sharp turn. So as I wait, I check in with myself. What's my breathing like? Is my jaw clenched? Are my shoulders tight? Am I leaning in toward the screen in a tense posture, or am I sitting back relaxed but attentive? These small physical cues tell me a lot about my mental state. And now as we approach the 10-minute mark, things start to shift. I notice the market is showing signs of giving me the setup I want. The price is aligning, the macro context is holding, the model is preparing, the narrative is supportive. But I'm still patient. I don't rush in at the first sign of movement. I let the pattern complete. I let the confirmation come. I let the market tip its hand. That's very important, letting the market tip its hand. That's another critical point. You don't make money by predicting. You make money by responding. I'm not trying to predict what the market will do. I'm watching what it is doing and responding when the evidence lines up. As I get closer to pulling the trigger, I already know my parameters. I know where my stop loss goes. I know where my profit target is. I know how much size I'm using. There we go. Now I'm making my decisions, as you see. You plan your trade and you trade the plan. I also remind myself of my risk, as you see, how much I'm willing to lose on this trade. How does it fit into my day, my week, my month? Where am I in my psychological capital? Am I coming from a place of strength, or am I recovering from recent losses? All these things matter. But at the end of this, I'm fully engaged, fully focused, but I'm still calm. I'm ready, not rushed. I'm alert, but not anxious. Boom, I'm in the trade. And initially we start in drawdown, but I'm not nervous because I'm confident in my setup. Right? Now we in the heart of this session. I'm entered in a trade, and now you see we approaching green. This is good. Now this is where the real work begins. Holding, right? This is the hardest part. People often think that the hard part of trading is finding an entry, but in reality, the hard part is managing yourself once you're in. So let me take you inside my mind over this next long hold. I think this trade lasted for about an hour and 15 minutes or so, or after probably an hour and 50 minutes, if I'm not mistaken, right? So this is where psychology becomes everything. The first thing is acceptance, accepting your trade, that you're in it and you're going to let it play out to the end. I've already accepted that this trade may stop out. I'm not attached to the outcome at all. I'm completely detached from it because the only thing I can control is my process. I cannot control the market. I cannot control what price does next. I can only control my preparation, my execution, and my risk. So as I settle into the trade, the first psychological move I make is detachment. I remind myself, you've done your job. Now let the market do its job, right? I'm monitoring the environment. Even though I'm in the trade, I'm still watching the bigger picture. Watching how price moves toward my target. Is it moving cleanly or choppily? Is momentum accelerating or stalling? Is volume confirming the move? This is how I'm managing it, right? And you guys could probably, as watching the trade, feel the emotion through it. I'm also watching how the market responds to key levels. That's very important. Do we expect support and resistance zones? Are we respecting it or are we disrespecting it? Do we slice through them like butter or do we hesitate? All these things are talking to me. These details give me clues about the health of the trade. Mind chatter begins when it's like, so I want to be honest with you guys here, right? Even after years of trading, the mind will chatter once you're in a position. Thoughts like, should I move my stop? Should I take partial profits? What if I get stopped out just before the target? What if the market reverses on me? All of this is noise. Trust your process. And my job, your job as a trader, is to notice the noise but not obey it. Not obey it. So I observe these thoughts. I let them pass through. I don't react impulsively. I come back to my plan. Where's my stop? Where's my target? Is the trade thesis still valid? If the answer is yes, I hold. And I did this every step of the way. There were times in this trade you're going to notice where you thought the market was going to the target. And sometimes you'll feel a little bit excited because you're like, yes. But then it draws back. And then you're like, oh, well, is it turning on me? And I've been in positions where I've seen the market make a full 360 just before it hits the target. Right? And this is all in trusting the process and letting it play out. The tug of impatience, right? As we move deeper into the hole, impatience starts to pull at me. Why? Why is it pulling at me? Because sitting through a trade can feel like sitting in a waiting room with no clock. Time stretches. You know what I mean? Every tick feels amplified. But here's where experience speaks. I remind myself that markets breathe. They expand and they contract. There are waves of momentum and waves of pause. Right? You got troughs and you got crests. That's how the market moves. So you're going to get points where you're like, oh man, it's not working out. You know what I mean? But got to trust it. So just because price isn't running straight to my target doesn't mean the trade is invalid. It means the market is doing what it always does, working through its process. So in that instance, what do? So I take a deep breath. I relax my shoulders. I check my posture. I remind myself this is part of the game. Right? Now, I wasn't able to record during the trade, which would have been better. We use getting it live, right? But I'll do it for the next video. But I'm going to give you my whole thought process, what I was thinking throughout this video, right? I was checking the broader market. While holding, I keep glancing at the macro context, which you're not seeing that here. I will show that in another video when I'm giving more exclusive. So prices, it's in the green. It could still pull back, so I didn't move my stop loss. And I trusted my stop loss, so I just left it there, and I'm letting the trade play itself out. As sometimes you'll see price pull back, and the momentum might slow down and feel slower. And I'll tell you what, another noise that maybe traders project on themselves is to watch social media content postings of people's wins while you're still waiting. It's the worst thing. You gotta cut all of that noise off. This is where emotional discipline is tested. I remind myself that doubt is not a signal. Doubt is just an emotion. And this is where you got to be observant of your emotions, of what you're feeling. So you know how to tweak that, or you know how to strengthen it, or you know how to deal with it as you progress along in your trading. My signal is the market structure, the price action, the levels, and the alignment of time, price, macro, setup, model, and narrative. So I let doubt pass. I stay with my plan. Right? Managing my internal state. keep scanning myself. How's my breathing? Am I tensing up? Am I mentally rehearsing losses? Am I daydreaming about profits? Both are distractions. My goal is neutral presence. Not overly pessimistic, not overly optimistic. I stay here in the moment, breath by breath. And that's important, staying in the moment of it. Experienced traders is going to watch the behavior, not just the price. And you guys could comment too, like how you felt watching certain parts of this trade. This was actually a trade I took on my evaluation account for one of my prop firms. For one of my prop firm accounts, right? And you really just want to watch and see, is the behavior still healthy? Our pullback shallow or deep? Our surge is impulsive or measured? These details tell me whether the trade has strength. So instead of fixating on PL, I watch the character of the market. That's how you actually get paid. Watching the market as patterns, reading it. You don't get paid off of time. This is not a job, and it's not a 9 to 5. You're not getting paid for your time, right? You never could judge the time, because you could get trades that's gonna last 15 seconds. You get trades that's gonna last up to 15 minutes, up to 1 hour. And I've been in trades where I've won in 15 seconds, 1 minute, 2 minutes, 3 minutes. Trades for, well, this one is an hour and 50 minutes. And you think, would you be able to manage a trade for an hour and 50 minutes? As you watch this video with me, you're gonna see. And you should practice seeing if you would be able to manage this watching this video. And during these trades, while you're engaged in them actively, it can be draining on your mental capital. So you gotta kind of remind yourself. For me, I remind myself like I'm a process-focused trader. I have like a statistical edge, not a guaranteed outcome. Because you have to know, every time you enter the market, it's at a risk. But you want to enter at a calculated high probability risk. You're not here to execute. Sorry, you're not here to control, actually. You're here to execute. You're not here to control. And just locking that into your mind, your mindset, it'll keep you from slipping into over control or fear. And just trust in the bigger pattern. Often, trades that play out over long periods test your ability to zoom out. If you're too fixated on the 1 minute chart, every tick feels like life or death. But when you pull back to the 5 minute, 15 minute, or even a 1 hour, you see the larger wave. So I regularly toggle my view, as you'll see in the video. You gotta always remind yourself, like I remind myself of the higher time frame alignment. I remind myself why I took the trade in the first place. I stay anchored in the bigger picture. That's very important. One of the most powerful things a trader could do is nothing, as I said before. That's why I say you don't get paid for your time. If you gotta wait, you just gotta wait. You gotta just let the trade play out. Don't adjust your stop. Not yanking the target. Not fiddling with the size. Just let the trade play out. All of this was premeditated. I said, okay, I'm going to take 10 contracts. That's what I entered with. Because of the confluence and conviction I had, I said, okay. I set my stop loss. I set my target. And I just let it play out. This kind of quiet mastery it's not just glamorous, it's not just flashy, it's just solid, grounded execution. So I'm here watching, breathing, waiting, and letting the market unfold. As price gradually makes its way toward my target, new temptations arise. Like, there's a whole bunch of temptations that arise. Do I take profits early? Do I lock in some gains? Do I cut the trade just to feel safe? Again, I come back to the plan. What was the reason for the target? Was it a key level? Was it an expected measure move? Was it a risk-reward multiple? If the logic still holds, I hold. You know what I mean? And you're always going to get like what ifs. What if the market reverses? What if the news hits? What if volatility spikes? These are a real risk. But you accept the risk when you accept the trade. You understand? You have to understand the risk is all part of the game. The way I handle the risk is not by avoiding it. It's by containing it inside my predefined limits. So instead of worrying, I monitor. If the market conditions change dramatically, I'll just adjust. You know? But I don't primitively sabotage my trade out of fear. You understand? Meaning, you don't want to exit prematurely. And then after you exit, you see it hit your target. That's going to bring on, negative emotions. Give you probably a negative impact. Because you're going to feel like you missed out on something. And even that can trigger FOMO. And I figured FOMO probably you want to re-enter. That's happened to me in my past where I've re-entered trades that I've exited prematurely and then ended up losing everything. So that's something you don't want to engage in. And I'll say, always take everything the market gives as a lesson, right? So even as the market moves in my favor, I cultivate gratitude. Gratitude is very important. I'm grateful for the opportunity to participate in the market. I'm grateful for the lessons unfolding. I'm grateful for the chance to practice mastery. This keeps me humble. Because here's the truth. We don't deserve profits. We earn them through alignment, skill, and patience. Right? As you look, I've been in this trade for about a half an hour now. Well, under half an hour I've been in the trade, but I've been in the market for about a half an hour now. That includes looking for my setups, trades, confluences, so on and so forth. And then I've entered the trade about, 10 to 15 minutes in, I entered the trade. So I've been in the trade for about 15 minutes now, approximately. All right. When you enter this stage of the trade, it's not about the setup anymore, because you already took your setup, you already entered the trade. It's about execution, endurance now. How do you endure it? Right? Here's something a lot of traders get wrong. Right? They either hyper focus on every tick, staring at the chart like a hawk, or they completely disconnect and stop paying attention. Neither extreme works. You have to find balance. What I do here is balanced awareness. I stay aware of what the market is doing, price action, momentum, structure, but I avoid staring at the PL or fixating on every tiny fluctuation. Instead, I glance at the key levels, check the behavior, and then I pull back. This keeps me grounded and prevents mental burnout. You got to watch for signs of like shifts. All right? And at certain points, you're going to find out that the market starts to change character. And that's where a sense of nervousness might kick in. But you got to learn how to maintain that. How you maintain it is through your observation. Maybe you might go check on like correlations with the macro assets, see if they're weakening or they're strengthening, and that's going to also give you strength into still believing in the trade. Sometimes volatility even compresses. So that's why macro times are important, because that's when the volatility kicks back in, and then you'll see a spike, whether it's going to rally or whether it's going to drop. But momentum is very important. Sometimes I ask myself, like, are we still in alignment with the higher time frame setup? That's very important. Is the narrative still intact? Are time, price, macro setup, model, and narrative still flowing together? And if all those say yes, I hold. If things start to fracture, I prepare to adjust. But I never adjust reactively, only with clear evidence. And just a cool reminder, as I told you before, every 5 to 10 minutes, give yourself a reminder. Because at certain points, the mind will start throwing out all kinds of temptations. It'll tell you, oh, you got a nice profit here. Why not just close it now? And that's prematurely exiting. What if the market reverses just before you hit target? You can size down here and lock in some gains. Like it's saying all type of thing, throwing all type of temptations at you. But here's where I practice non-action as a skill. I remind myself the trade was designed with a full plan. To stop in target are part of that design. Interfering mid-trade weakens the edge. So you don't want to do that. By all means, you want to avoid that. So unless something structural changes in the market, I keep my hands off the trade, period. Not clicking, just watching, observing, reading the language. You got to be handling like mid-trade pullback. Like, you see how many times it pulled back where you thought it was going to go and it pulled back, right? As you're observing with me. It's common in long holds to experience a pullback phase. Price starts retracing, momentum cools. Other traders on social media start bragging about sniping the top or buying a dip. And all those things are like distractions, so you need to avoid the noise, as I said. This is where doubt sharpens. I watch the pullback carefully. Is it corrective or impulsive? Is it supported by volume and market internals? Are the macro correlations still aligned? If the answers tell me the pullback is just a normal market pause, I hold firm, but I stay ready. If something material breaks, I won't hesitate to cut or to reduce risk. Around this stage, macro awareness becomes critical. I keep glancing. Keep monitoring. But you won't see it on this screen. That's the thing. You'll see it on it's on the other screen. But as I said, I introduce you guys to the macros in another video. But again, no panic, no guessing, only measured responses. Right? Long holds are not just mentally demanding, they're physically draining. Because at this point, I am drained mentally. But I still have to engage, I still have to pay attention. I look out for signs. Am I clenching my jaw? Are my shoulders tight? Is my breathing shallow? So I actively release tension. Roll the shoulders, stretch the neck, take slow, deep breaths, and just release. It's crucial because the body sends signals to the mind. So a tense body amplifies anxious thoughts. A relaxed body supports calm execution. Right? At least that's how I view it. But at every point in time of this that I am gauging, I keep replaying the market narrative in my mind. What was the macro backdrop at entry? What was the catalyst that launched the move? Are market participants still trading on that narrative? This is like anchoring yourself to a map. Without it, it's easy to get lost in noise. Right? And I'm also, time is so important. Let me tell you, time is so important at this point. Like, I do not like being actively in a trade after 12:10. Preferably 12. But I will let it play out to 12:10 and let that macro play itself out. If it's still showing my my trade is like confidence in the trade. You know? Remember, trades just don't move on numbers, they move on stories. Sometimes you're talking a whole different language, so you have to be able to read the language. Like one of the weirdest psychological pneumonia during a long trade is time distortion. 10 minutes can feel like an hour. Every second feels heavy. To manage this, I sometimes pull away from the screen. I glance at the chart, then shift my focus. Journal a quick thought. Take a short walk around the room. Do a light stretch. This prevents the trades trance. It's called like trader's trance, that zombie-like state where you get sucked into the screen and lose objectively. You don't want to do that. Another thing is too, during like long holds, it's common to glance at other instruments and think like, oh man, look at the breakout in gold. Bitcoin is flying right now. Maybe I should have been trading oil. This is the mind's distraction mechanism. I remind myself, focus on one battle at a time. There's always another trade. My edge comes from depth, not scatter. So I gently pull my attention back to the current position. Revisiting the why, Every 10 to 15 minutes, I ask myself, why am I in this trade? Does the reason still hold? If the why is intact, I hold. If the why is breaking down, I reassess. This keeps me from trading based on feelings. See, as we get deeper into the hole, the market may start accelerating towards the target. This triggers a new wave of mental noise. Maybe take profits now, just to be safe. What if it reverses a few points before hitting? You waited so long, don't blow it now. This is where discipline peaks. I remind myself the market doesn't owe me anything. My job is not to predict every tick. My job is to execute the plan I built. So I breathe, I stay steady, let the market come to me. And a lot of traders find it hard to trade NFP because it's a highly manipulative day. Actually, it's a highly manipulative week. A lot of traders blow accounts during that week. Right? At this point, you want to check, is the market structure still healthy? Are you following your original plan? If yes, no reason to interfere. And the next thing, while monitoring is so important too, because if the structure breaks down, be ready to defend a position or exit. Take a break even. If the market stalls just below the target, watch for signs of exhaustion or reversal, right? If a reversal pattern starts to form, get prepared. It looks like it's reaching exhaustion level, volume is dying out and it can't reach the target and it's using it as a resistance. Just be prepared mentally and physically to make alters in the chart. Alters in your trade. But above all, I remind myself, no heroics, no ego, no regret, just clean execution. And if you pick this as your profession, this all comes with it. By now, I'm aware of the mental toll. Patience comes with a price. It drains willpower, stirs up uncertainty. It challenges my identity as a trader. But this is the cost of mastery. Every experienced trader pays it. So I lean into discomfort, and I see it as a growth edge. Always remember gratitude, part of the process. I pause and remind myself, this is why I trade. This is why I craft. This is the craft I chose. This is the process I love. Win or lose, this is the journey I'm here for. And with that mindset, I release the need for a perfect outcome and anchor myself in the practice. Nothing is perfect. And you can practice to try to perfect perfection, but there's always room for a mistake, so nothing is actually perfect. As I move into the next stage of this long haul, I know the hardest part is yet to come, but I'm ready. I already built the foundation, a clear plan, a grounded mind, a steady body, a focused awareness. Now it's just a matter of following through. So just bear in mind, we've almost been in this trade for an hour. We're approaching that hour mark shortly. And this is the test where it's like a test of trading psychology. It sharpens, By this point, the early entry excitement is long gone. The market has likely shifted through several phases, maybe consolidating, maybe trending, maybe throwing off fake signals. And this is where most traders mentally unravel. But here's where my process kicks in, You got to embrace the middle grind. The middle phase of a long trade is often the hardest. There's no immediate gratification. The market moves in slow waves. You experience minor pullbacks. That'll test your patience, as a trader. At this stage, I just remind myself patience is the core edge. I don't get paid for being in a trade. I get paid for managing it well, as I said before. And the market doesn't owe me any type of smooth price action, so I lean into the grind. And as you see that strong pullback there, right when you thought it was going to take it, right? Things like that. Whew. Gotta have the wherewithal mentally to withstand that type of price action. Because that move right there will have you thinking, oh, we getting a reversal. At which point I had to just manage the trade. still believe in the process and watch levels, see if they were holding still. And once the market was showing me, as I read the language, it was showing me that it still agrees with my observation and still playing out in my favor, I hold. There we go. I'm checking other time frames, seeing what the market is doing. This is very important. Also, you gotta always just keep in mind time. What time is it? What time are you expecting this move to reach its target? What will you do if it doesn't reach it in that time frame? You know? And I already had my mind set that if it goes past 12:10, as I told you, I will exit. Because during the lunch hour, the market is very unpredictable. So I wouldn't engage in any trades at that point. Wherever price is at that time, I'll exit, whether I'm in profit or in drawdown. But throughout it all, I'm not letting it shake me out. At every point in time, I'm just monitoring the market, monitoring price behavior without attachment. I watch price pullbacks. Are they orderly or chaotic? Breakouts, are they clean or fake? Volume, rising or fading? You understand? These things are important to watch. And I don't obsess over every tick. Interpret random chop as meaningful. Get caught in chart hypnosis. Don't do it. Right? Do not obsess over every tick. Do not interpret random chop as meaningful, and do not get caught in chart hypnosis. Sorry. Do not get caught in chart hypnosis. I stay objective. Tracking price, not worshiping it. Managing the mind during boredom, because at times, like, you're going to get bored during the market. And your mind might wander off. It might stray. And especially being in a trade this long, boredom creeps in. Trust me. And at some point, you're going to start second guessing the trade. Trust me. My mind wanders to other setups, the temptation to just do something. That definitely rises. You just want the market to just do what you want it to do at that point. And as I said, you got no control over it once you enter. You got to leave it, let it play out. Here's the key though, right? Boredom is not a signal. Lack of action doesn't mean lack of progress. Right? My edge is in non-reactivity. So I practice active stillness, watching without forcing. And, protect the risk profile. Even mid-trade, I stay aware of stop placement, position size, overall risk on the table. And I ask, has anything fundamentally changed to justify adjusting stops? Am I managing risks reactively or proactively? Most of the time, the answer is leave it alone. The plan is working. You know what I mean? Talk yourself through the trade if you have to. Have emotional check-ins. As I told you, every 5 to 10 to 15 minutes, I check. Where's my heart rate? Am I holding tension in the body? Am I feeling anxious, bored, or greedy? If I notice tension, I breathe deeply, relax my shoulders, ground myself in the present moment. This keeps emotions from leaking into decision-making. You know, during this long hold, it's tempting to scroll social media, watch other markets, chase new setups. But I remind myself multitasking erodes focus. Chasing new trades breaks discipline. Only job is to stay with the process. That's why you have a model and a setup. Because your only job is to stay with this process. So I narrow my attention to this one position. Watching market context evolve as the market unfolds. You know, is volatility expanding or contracting? Are we heading into a major session, open or close? You understand? That's very important because the AM session is actually going to end where lunch is going to come in. So that's very important. And do you have later day news? Are news catalysts on the horizon? You get what I'm saying? I stay aware of these shifts because they influence price behavior. They affect participant psychology. They determine how I manage the exit. I stay adaptive, but I don't abandon the plan without cause. Right? Reinforcing self-trust at all times. Midway through a long hold, doubts can whisper. Was that entry really valid? Should I have taken partial profits? Maybe I got lucky. I counter this with I executed based on evidence, not emotion. First things first, right? The setup aligned across time, price, macro, and narrative. I trust myself to see through this. Self-trust compounds over many trades. Stay physically and mentally maintained to stay sharp. You want to sip a glass of water if you have. Stretch your body. Rest your eyes from the screen. That's important too. Because these things can give you physical fatigue. So small actions that you could do to prevent mental and physical fatigue, definitely try to do it every 5 to 10 or 10 to 15 minutes. Because trading is both a mental game and an endurance sport. Right? You see this pullback, market is playing. In the market now for just about an hour. At this point, most traders crack. They close too early just to feel in control, micromanage stops, choke in the trade, lose faith in the original thesis. But I remind myself, patience is not passive. Patience is active discipline. I'm getting paid to wait, not to act. Every moment I stay grounded is a win. Yeah. And just reset the narrative. At about an hour in, I revisit the macro plus narrative alignment. Is the NFP reaction still holding? Are we still in line with the expected directional bias? Has liquidity shifted? I don't assume the market stays on script. I revalidate the narrative. If the story holds, I stay confident. If the story cracks, I adjust. And as I said before, I would suggest staying off the 1 minute chart because every spike feels like a climax, every small pullback looks like a reversal, every wick triggers a heartbeat jump. So it's better to zoom out higher time frame. Or just stay zoomed down in your mind, even if I'm zoomed in on the screen, you know? As I said, breathing is very important. Breathing through the discomfort, yeah. And you know what else? I would also say, after a trade like this, win or lose, reward yourself for discipline. That's important. You know, whether the target hits or you scratch out, celebrate. Yeah, just tell yourself, like, you're going to treat yourself to tacos after. You know, if you like tacos, or, you know. But don't check Uber Eats mid-trade. Do it after. So at this point, my target hasn't hit yet. Neither have I been stopped out. You know, price is just dancing. So let it dance. It may feel like it's taunting you. But as I said, you got to remind yourself, why did you take the trade in the first place? Your macro factors, are they still in play? And the narrative, is it still intact? Don't micromanage though. Hovering over your mouse or over the close button. Yeah, right? Don't zoom in and out of the charts compulsively. Checking your stops 10 times. Just let it play out. The market doesn't reward anxious tinkering, It rewards clean execution and patience. But experience your emotions. Observe them. Are you feeling adrenaline rush? Are you feeling excitement? Are you feeling FOMO, boredom, anxiety? Try to identify your feelings and your emotions. You're not in the market for a cheap dopamine effect, You're in the market to run a system. I feel like for myself, how I survive as a trader is I master self-talk, self-reflection. Because I found out that your mind will try to sabotage you if you let it. And, you get sneaky thoughts creeping in sometimes, such as maybe I should have doubled my size. Maybe I should hedge this. Maybe I should post a flex story on Instagram. But honestly, right now, it's focus. Focus is key. And then sometimes it could feel like we're yet so close, but still yet so far. Look how near I am to my target at this point. And you're probably wondering in your head, why didn't it hit yet? Or you're probably saying to yourself, can you just hit? Right? And sometimes when you trail your stop loss, you end up getting stopped out prematurely also. And for me, that's a fair tactic. If you trust your stop loss, let it play out. There's times, yes, when I will move my stop loss up to break even. It just depends on the circumstances of time, price, and just the market at that point in time. Because you gotta just control what you're in control of, right? Just remember, you're not in control of the outcome, but we're in control of inputs. So no matter what happens, if you follow the process, you're good. The win is in the discipline for me, not the P&L. That's how I look at it. That's why I said, regardless how the trade plays out, treat yourself, celebrate yourself as a win. Because if you followed all your rules and you were disciplined enough to see the trade through till the outcome, then you should celebrate. Because that's a big achievement. In my eyes, that's a big achievement. Right? At this point, we're just sitting on our hands and waiting. And if you made it this far in the video, please comment, let me know, what have you learned and what would you like to learn? And if I'm capable, I'm definitely willing to teach it, make you a better trader. So yeah. Now you're still here with me, and the real test is on. Because a lot of people probably nervously scalped a few points and called it a day. You know, some people don't have that wherewithal to see the trade through. Because almost 2 hours to be in a trade, that's a long time. All right. A cool reminder you can give yourself also is this trade was never about predicting every tick. Any trade you take is not about predicting every tick. It's about the positioning within the larger move. And notice how after the initial momentum, the market pauses, consolidates, and shakes people out. This is where most traders sabotage themselves. And sure, these things that I talk about, I experience them as well, because also I've had to remind myself 27 times not to touch the mouse in this process. So no one's perfect. You know, here's a funny thing about holding a trade. 5 minutes feels like an hour. An hour feels like a day. You live through 3 emotional lifetimes between entry and exit. It's like time bends around your position. If you want to experience time travel, just open a trade with real money. Because I'll tell you, the feeling and the emotions that are revolved around real live money compared to paper money, it's 2 different concepts, 2 different set of emotions. Because you tend to care less, of course, when you're doing paper trades. It's not your money you're trading with. But when you're trading your real live money, it's a whole different ball game. So I would advise like beginner traders, trade a paper account when you first start out, and be consistent with a paper trading account first before you enter with live money. Yeah. And at this point, I would say what I'm experiencing here was like, is the preparation is either carrying me forward or My doubts are pulling me apart. But luckily, I studied the macro backdrop, knew my key levels, set clear targets and stops, and that foundation buys me calm moments when others like panic, So that's why observation is so important. For me to be in this trade so long, right, the worst thing that I could do here is break the plan midstream. Of course, you're going to get thoughts of, do I just walk away? Do I trail tighter? Do I take it now? Because you're feeling like your heart rate is spiking and your target seems to be getting a tease, like it'll go right there and then snap back, and that's testing your patience, right? A lot of us want to win the trade just to go tell our friend and show on social media that you won, right? But I think that's the least for real traders. When I say real traders, I mean profitable traders. They don't worry about those things. You have to be your own inspiration, your own guidance, because when you're trading as a trader, you're alone. It's just you and the market. So you got to be like your own therapist. But you know what? The market has a way of separating strategy traders from emotional traders. You'll notice that. It tests your patience. So during that test of patience, it's going to separate strategy traders from emotional traders. Honestly, watching the language that the charts speak, you could almost sense like all the other traders that are engaged in this market at this moment, you're watching all of their human behaviors unfold on the charts. Fear, greed, patience, hope, right? While I'm just detached from it. So of course I feel these emotions, but I am not feeding into it. I am observing it and dealing with it as it comes. So, as I mentioned before, like, it gives you self-realization dealing with the markets. Trading teaches you more about human nature than a psychology degree, honestly. Like, really. So we're deep in the session at this point. Prices work through like a consolidation. Well, it still seems like it's in it at this time. So price tested toward the profit target zone. But yet still, the market is showing signs of directional commitment. Right? And at this point, the checklist running in my head is, are we holding above key movement averages or key levels? Is order flow confirming the strength of my directional bias? A momentum indicator still positive if you use momentum indicators? You know, although I don't use momentum indicators. But just as an example, I'm showing you. And notice, I could have took partials, but instead, I didn't, right? Didn't scale out. I planned, at this moment, I'm like, when I first took the trade, my plan was to exit with full size. So at no point in time did I deter from my original plan. It's still intact, and I'm still letting it play out. Because I believe that how you exit matters just as much as how you enter. So at this point, I'm up nicely. I can taste the win. And sure, the thought came in my mind to just hit the button and lock it in. You know? But here's what separates the pros. They manage based on process, not emotion. They let the market tell them when it's done. All right? Because, you know, trading isn't just lines on a chart. It's reading the mood behind the moves. You're reading the texture, not just the levels. At this point, I probably refill my teacup about 3 times. Talking to myself constantly. You see, this right here is a great example and a great time to explain why you don't chase, why you respect the trailing stop, why your original target still makes sense. Notice how price is still respecting the key levels, right? Often smart money aims to tap that liquidity pool before reversing. That's why I'm holding for full target instead of bailing early. Some things also that traders ignore is your mind and body are your number one trading tools. Markets move fast, charts demand focus, and if you're running on 3 hours of sleep and a breakfast of coffee and sugar, you're already trading at a disadvantage. A lot of times sleep is overlooked, and that's an edge. The quality of sleep the night before affects how your brain handles uncertainty today. When you're well rested, you process information faster, you handle losses without panic, you stick to your plan. But when your sleep is deprived, you get emotional, you chase impulsive trades, you misread setups. Sleep isn't lazy, it's an investment in mental charity. Right? Then again, like nutrition, it's a big thing too. Like feeding your brain, food is fuel. Period. Can't run a race car on bad gasoline, right? So things I've learned is like heavy greasy meals before trading slow you down, right? Too much sugar spikes your energy, then crashes you mid-session. Staying hydrated keeps your focus sharp. So tea, water, those things might assist you. Personally, I aim for light, clean meals. And sometimes I don't even trade before I enter the market. I just either water or tea. Or black coffee if you're not overdoing the caffeine. But even that, I find kind of, isn't the best thing. Your brain is 2% of your body weight, but uses 20% of your energy, so feed it right. Yeah, that's a gem right there. It's a funny thing, right? You may think that traders sit all day, but the best traders know. Get up every 30 to 60 minutes, do quick stretches between trades, walk around after the session to decompress. Physical tension turns into mental tension. Release one, you ease the other. So look right this moment right here. Price went right to the target. Right to the target. And turns around and is going the opposite direction now. So things like this is where, maintaining your emotions is very important. Perfect example. Yeah. Move like that will surface all your emotional baggage. If you're stressed, angry, or anxious outside of trading, you'll carry it into the market. I'm going to tell you, some things that help too is like journaling. I'm big on journaling. Before a session, I journal. And after a session, I'll journal. Journaling is very important. And a lot of times, when you journal and write it down, you tend to process it better. There's times when you could go over it if you choose, but just in that moment of writing it out, you're processing it. So you don't need to consistently go over your journal. But I stand by having a journal. I think all traders should have a journal. Very important. It's more so for trading psychology because it's to manage yourself, really. Your feelings, your emotions, and how you could do better the next time. Meditation is good too. And also, staring at the charts all day is not healthy at all. Avoid that by all costs. Have a session that you trade, have a time limit. This is all in your setup. You should have this down as rules in your setup. So avoid staring at the charts all day. That will wear you out. And remember, I want you to bear in mind the point of you getting into trading is so you can devote more time to your personal lives, so you could gain more freedom, or you could gain back more time in your life that you would originally spend working or maintaining, so that's the gift that trading should bring you. It should grant you that gift. So having a life outside of trading is very important. I'll tell you, if your market is your only hobby, you're setting yourself up for a meltdown. Don't do it. Take advantage of what it offers. That's why it's important to have a model and a setup that you abide by, because it'll keep you from spending all day looking at the markets. And the less you trade is the better, and the more capital you'll preserve, because trading is actually about capital preservation. It's not how much money you make, it's how much you can save, how much you can preserve. That's what the market's about. Well, in my experience, I should say. People might have different views. But from my view, that's what I've experienced. And that's what I believe. It's more so a marathon, not a sprint. If you burn out trying to make it in a week, you won't last a year. Trust, you won't last a year. Build a foundation. Protect your health, protect your energy, protect your passion. A sustainable trader is a successful trader. Remember that. I'll say it again. A sustainable trader is a successful trader. Remember that. So, yeah, we can talk about setups, risk management, entries, and exits all day. But none of that matters if you show up to the charts foggy, wired, or running on fumes. So take care of your machine, which is your body, because you are the machine. Because sometimes the most alpha move that you can make isn't another trade. It's a nap, a walk outside, maybe even a smoothie. Right? As you see, this market really requires patience and discipline. But you gotta let the market paint its picture. While you just observe. Sometimes the markets could give you, like I said, a quick setup. You're in and you're out. Less than 10 minutes. Sometimes less than 5, You get a quick dopamine hit, if that. And a lot of time, well, most of the time you're watching and waiting, right? Not doing anything until your opportunity presents itself. At this point, I'm aware of my emotional temperature, any creeping fear or greed, the temptation to just get it over with. But as you see, I stay anchored because discipline over time is what prints long-term results, right? Also, shout out to anyone still watching this marathon. You're basically getting a free seat into my thought process. So if you guys are ever in a trade like this, holding this long, just remember my video. And remember, it's okay to fidget. It's okay to get bored. It's not okay to self-sabotage. Remember this. The key right now at this point is to breathe, trust the plan, let the market do the heavy lifting. That's that. About an hour and 30 minutes in at this point. And still waiting for my target to be hit. But I'm not divorcing the trade. I would say holding a winner is harder than finding a winner. Yep. And I want to give you guys a little insight, right? Most traders fail not from bad entries, but from bad exits. That's something they won't tell you, right? That's where a lot of blown accounts come from. People cut winners too soon, hold losers too long, or freeze when it's time to close. Your exit discipline determines your long-term success. See, the market rewards consistency, not genius. Trading isn't about being the smartest person in the room. It's about showing up with a process, executing your edge, surviving the bad days without imploding. Most people overestimate talent and underestimate consistency, right? Still waiting. That stop loss was perfect. The entry was a sniper entry too, because it never came back that far. It just started going up and it maintained. You know, the whole trade was structured on asymmetric risk. Small downside defined by stop, large upside defined by target. That's how you survive long term. You must play games where your wins are bigger than your losses. Otherwise, the math will eat you alive. Believe me. One of the hardest skills in trading is doing nothing. No adding size last minute. No grabbing partial profits out of boredom. No over managing. You know, sitting on your hands is a superpower. Try to master that. And another suggestion I'll give traders is, if you're sick and not 100%, or you feel, or if you're just underslept, or living on like energy drinks, you know, like those things put you at possible risk of not performing at your best ability. So I would suggest, instead of risking a loss, that you wait until you're 100% to enter the market or to engage in the market at all. At this point, I'm still detached from the market, calm, focused, just maintaining the trade at this point. Remember, after the trade, the work isn't done. You still got to journal it. Just identifying what didn't, reviewing what worked, refining edges. Just bear in mind, you don't get better by trading more, you get better by reviewing more. Right? And yes, sometimes the biggest edge in trading is just staying out of your own way, honestly. Right? And I'll tell you, just following your rules is so rewarding, because once you could do that, you could also become profitable. Great chance you'll become profitable, and I don't know. And trading may give you what you want as far as freedom is concerned. But a lot of people think trading is about freedom. And sure, it can be. But the real freedom comes from mastering your emotions. Designing a life that supports peak performance. Creating consistency over time. If your life is chaos, your trading will reflect that. So try to always keep your life at a balance. Keep it in harmony. Even watching this complete video to the end is really testing your patience also. Let's be honest, after you watching this video right now, probably wondering what snacks I'm eating behind the screen. And honestly, the only thing I had was tea. That was it. Tea. It's just me, the charts, and a glass of tea. Or a cup of tea. I feel like trading kind of trains you into a monk lifestyle. you know and another thing, it's so hard to keep your focus during a trade of this duration, because it's another risk, because you emotionally drift. Honestly, you do. But gotta be focused, gotta keep the focus, gotta stay strong. You just gotta stay engaged with the market. but detach from the outcome. That balance is where the magic actually takes place. That's where it happens. And the reason why I even stuck it through with this trade is because all the conditions that I identified in the beginning of this video, they're still all aligned. Time of day, macro backdrop, market structure, momentum, liquidity profile, the overall narrative, all of these still align, and that's the reason why I'm staying in this trade. And I'll tell you the next thing is that what actually separates, another reason that separates the pro traders is that, such as myself, I don't rely on one signal. I feel like that's still risky. I like to stack confluences. Have you heard me mention throughout the video? I stack my confluences, and as long as those are still aligned too, it gives me strong conviction. So you guys could even make mantras, for your trading. I'll share mine with you. My mantra right now is trust the plan, honor the process, don't fumble the ball on the 1 yard line. Yep. Honestly, when I look at it, 70% of trading is all about the psychology. The technicals are the other 30%. But the concept that's hard to grasp is the trading psychology part. And that is where most traders struggle. This is what separates the strong from the weak. And a lot of it is just problems you have within yourself that trading is actually showing you, which is the self-reflection. Some people are willing to deal with it, some people aren't. And overall, trading is actually going to make you become like the best version of yourself. Yeah, trading will actually make you become the best version of yourself. Because it forces you to deal with those issues that you struggle with within yourself. And actually some issues that arise you weren't aware of. You had no idea that they even existed. And honestly, trading is supposed to be boring. You're supposed to tape read, stay out of market most of the time until you see an opportunity. Your model, your setup present itself, and it's supposed to be like that daily. And a good trader knows that not every day is a day to trade. There's some days that the market isn't presenting clarity and it's showing you basically don't engage today. Like I said, it speaks its own language, and when it speaks to you, you have to listen because you're not in control of it. It does what it wants to do, and you just have to observe it. And where it gives opportunity, you take it. Without hesitation. I think patience is underrated. Boring wins. That's all. That's how I see it. Boring wins. So I'd like you guys to even drop some comments. As I said, like, tell me some lessons that you learned from this. You know? Did it teach you more patience? Learn to wait? Let the market play out? Learn not to be the reason your edge fails? You know? Let me know what you learned. And some people look at trading as gambling, but it's not gambling. Just always remember, trading without a narrative is just like gambling. But as long as you have your narrative, your setup, it's not gambling. It's just you're taking calculated risk, and I don't consider that gambling at all, right? We're coming down to the end game right now, reaching the 2-hour mark. Actually been in the trade for about an hour and 10 minutes, but fully in the market engaging for about 2 hours now. So I want to thank everybody for watching too. Really appreciate you. But sit here and watch it. And there it is. Target hit. You know, the plan worked. I didn't force the exit. I didn't flinch at the last minute noise. I let the setup play out. This is the moment we prepared for, but it's also the moment to stay humble. All right? One trade doesn't make you, but how you handle one trade tells the whole story. So just stay safe in the markets. All right? I'll see you in the next one.